All right. What is going on, everybody on YouTube? Griffin here, coming back to you guys with another Sunday stock watch from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, before we get going, for those of you that will be tuning in for the first time, definitely consider hitting that subscribe button below if you're looking to make some money in the stock market. Just look at achieving financial freedom at the end of the day. That's what we're all about here. We're pretty heavy on the stock market, but today I'm kind of changing things up a little bit. We'll still hit on the stock market here in a little bit, but the main thing with this video is going to be just how to take that first step to achieve financial freedom. How's it going there, Josh? And by the way, before we get going, I mentioned this in the Discord group chat. I was messing around with my microphone earlier, and it was still kind of having that fuzzy background. I think I finally got it fixed, but as always, if I have any issues, definitely just let me know as soon as any issues start popping up. I don't know what's really going on. I have a very strong feeling it's something that's going on with the software that I use, because a lot of people are having the issue. But just bear with me, and if we ever do have any issues, like I said, just let me know quick. That way I can at least end the stream and then maybe come back on later. But just to pretty much hop right in, we're going to be talking about just taking that first step, because you can't be putting money at risk, essentially, if you don't have money to risk. If you're so worried about making ends meet every single month because you got credit card payments, student loan payments, car payments, whatever kind of payments, mortgages, any debt payment at the end of the day, you got so much debt just up to your eyeballs, essentially. A lot of people you just can't risk any money. You can't put any money aside, not only for trading, but for retirement as a whole. And I've got a compound interest calculator pulled up. I also got the Every Dollar website pulled up that I definitely suggest you guys download on your smartphone, get it on your laptop, all that good stuff. You can see the website platform is, I brought this website to your guys' attention, I think a couple times in the past, about a year ago maybe, but this is definitely a good overall platform to use for budgeting. It's very user friendly. They have a paid version for, I think, somewhere around $9 or $10 a month. I don't think you really need it. It's just about being disciplined. The paid version essentially kind of lets you slack off, because it'll track all of your transactions to where you can just drag and drop them to whatever you got going on at the end of the day, like your miscellaneous, your food, etc. But I don't think you need it. Like I said, I just update mine pretty much on a daily, hour by hour basis, and I put it in there myself. But and that's where it all starts, in all honesty. It all starts with a budget. If you don't even know, you would be amazed how many people don't even know how much money is coming in when you combine, like, your partners. Obviously, me and my fiance haven't mixed our incomes or anything like that yet, because it's just a belief of ours. Like, once we get married, we will, but right now we're not. But just so many people, even single people, don't even know how much money's coming in, and more so, they don't even know how much money's going out. And that's where most people get caught up. They start getting these credit cards. They have this great, brilliant idea of, well, if I get a credit card that's paying me 2%, 4%, air miles, whatever the case may be, pretty much giving me cash back, then why wouldn't I go ahead, get it, pay it off, pretty much transaction by transaction, pretty much run my budget through a credit card. That way I can save money, so to speak. And I mean, I won't lie, I mean, I do have one credit card that's stashed away in my safe, for God knows what reason. I don't use it, but at one point I got caught up in that game. I was like, I'm going to save essentially 2% per transaction, and when you add it up, it's just not even worth the headache at the end of the day to begin with. But because literally, look at your sales tax. Sales tax is like 8 to 10% in most areas. So, I mean, you're not even saving sales tax. It's just not even worth it. If you're worried about saving a penny is just a penny. No matter how many times you compound a penny, it's still a penny. But point being, first thing you gotta do is obviously just cut up those credit cards and get rid of all your debt, because the point being, whenever you get rid of debt, what do you have? Money. You have cash. You're not sending 5 minimum payments out of 30, 50, however many dollars per month out to Discover, Chase, JP Morgan, or I guess that is Chase, right? Wells Fargo, any of that BS, Capital One, or God help you, Bank of America. You're not sending your money to other people, making these companies more money that they really don't even need. So, I mean, you can see mine. I mean, down here, debt, nothing. Have no debt. And what do I make? In May, I'm going to be expecting to make somewhere around $4,000, probably bring home. Obviously, you do this based on your gross bring home, which I mean, I'll be straight up with you guys. The first probably 1 to 2 months you do this, maybe even 3, if you just never budgeted in your life before, at least the first 1 to 2 budgets, you're going to mess them up. You're going to underestimate how much you spend on food, how much you spend on like miscellaneous stuff like going out to McDonald's here and there. If you have a job like mine, especially where you're constantly out in the field, so to speak, and you forget to bring lunch one day and you go to McDonald's or Subway or something, you're going to underestimate how much you spend on a day-to-day basis. So I mean, don't get discouraged. How's it going there? Might be. Don't get discouraged when you're doing your first budget or two. You're always going to have to go through and tweak it. You'll have to tweak how much money you make, because all it is at the end of the day is your budget is just your starting point. And obviously, ideally, you don't want to have to change anything, but stuff always comes up, right? You forget about somebody's birthday. You were already close to maxing out your miscellaneous money. You had only like $10 left. You forgot about someone's birthday. So you're like, crap, well, that's $10 more I didn't think I was going to spend. And then you have to do some tweaking. But at the end of the day, your budget gives you permission to use your money. And whenever you don't have debt, like I said, what do you have? You have money. Like, so you can see right here, my expenses are probably look a lot like most of yours. Obviously, the rent might be a little higher, or maybe in some cases a little lower. Me and my fiance obviously split rent. We split the internet. We split any utilities. Our utilities, we always kind of overshoot. Like, anything that can vary, always overestimate. Always. Like this last month, I'm showing May's budget right now, but in April, again, we budgeted $100 for utilities because in our city, it can fluctuate a lot. I mean, corrupt city government, of course, utilities are ran by, and we budget $100 for each of us, like a $200 electric bill alone, which is more than enough, right? Well, we got our bill. The bill ended up being like $85, so boom, we get to knock it down to $45 roughly each. And then we have $55 more to put wherever we want. So that's the beauty of over budgeting too, is whenever you over budget, you can kind of, obviously you have more money afterwards to put towards your emergency funds, to put towards your debt, to put towards investing, trading, whatever the case may be. You have more options at the end of the day. So like I said, it all starts with a budget, and then it starts with the discipline. Like, once you start a budget, you'll be amazed how much, like, once you get in the habit, give it 1 month. If after 1 month you're still doing it, you're going to be amazed just how much more control you're going to have of your life. Because once you get control of your money, I mean, so much of your stress goes down. I mean, and then once you start knocking out, I don't know how many payments a lot of you guys have, but I know the average American's in thousands of dollars in credit card debt, usually thousands of dollars of car debt. And God knows how much on mortgages again. But I mean, once you get to the point where you have no debt, I mean, you can see me, for example, next month I'm going to set aside half of my income just for an emergency fund. Now you're probably thinking, well, how come you're not investing any of that? The reason why I'm not investing, putting any more into my trading account, anything right now, is because obviously I have a child on the way in August. Me and my fiance are going to be taking at least 2 months off of work. Our average cost of living, when you combine like all of our bills, like pretty much just 2x the rent, 2x the internet, 2x the utilities, 2x the gas, tolls, food, all that good stuff. When you 2 times everything, our cost of living is around $3,000. And obviously we want to have more than enough. I mean, realistically, we've done the math. We could probably take off like 4 months if we wanted, but I personally am only going to take roughly 2 months off because I'll just be ready to kind of go back to work at that point. And obviously, I already mentioned that I'll be doing the live stock market trading with you guys during those 2 months too, so that's going to be fun. But we wouldn't have this opportunity if it wasn't for getting out of debt, because literally 1 to 2 years ago, I had how many? I think 5, 6, maybe even 7 credit cards completely maxed out. I had a car loan that was, I think at the time it was somewhere around, it was either $225 or $325 a month, a car payment on a $10,000 car. I was in collections for various things, for like, I was going to a gym and then I ended up switching to a different gym, and I was dumb and signed up for this gym. I signed a contract and I thought just by hitting stop payment or whatever at my bank, I would never have to pay that gym again. So then they put collections out for like $300. I mean, I just had debt everywhere, essentially. Just felt like I was drowning in debt. And literally in let's see, I would say about 6 to 8 months, I paid off all that debt. And thankfully now, I mean, we have options. My girlfriend, my fiance, she only has her car payment, and we were paying, or not we, she was like paying a bunch on that. But then obviously here the last couple months, we've just been making the minimum payments because she's also saving a few $100s or so per month that she can with her income. She's saving money too for the emergency fund as well. Our emergency funds are going to be mixed because of paying the bills, obviously. During that time, we're going to be taking off, but after that, she'll be jumping right back into paying that car off as soon as possible, probably by the end of the year, and we'll be married at that point. And whenever we're married, we're going to literally have, we done the math, roughly $3 to $4 grand a month to just do whatever the hell we want with at the end of the day, because we keep our lifestyle, and that's including all of our baby expenses. I mean, we've already added everything up. We've got over a year's worth of diapers. I mean, it's just all about being prepared. We're all about being prepared. And if you can get in that mindset of just living on simply, it's just like your grandma probably taught you, live on less than you make, put money aside for a rainy day, because it does, you're going to have a rainy day. I believe there's a study actually that says like 5 out of 6 or something like that, Americans will experience a significant like financial hiccup, essentially, like something that costs $5,000 or more in an average time frame of like 5 to 10 years. So I mean, if you haven't had a significant just smack in the face when it comes to a financial disaster, be it someone getting cancer, just anything bad, a transmission goes out on your car, because that's like $2,000 to $3,000, right? If you haven't had a significant financial thing hit you in the last 5 to 10 years, you're overdue. So just get ready. Always have that emergency fund. And then obviously you can do what you want with your money from there. But I mean, literally, you can see I do not make a lot of money. I mean, I make $4,000. This month is going to be my worst month, just because my job, the pay fluctuates, because I get paid for production, a little bit of commission here and there, like kickback rewards and stuff. This month is by far going to be my worst month since I even started my job. March was just a slow, bad month for me. I'm only going to make, I think, less than $3,000. So I mean, you can tell, I mean, I do not make tons of money. Summer months are by far going to be my best months. I'll be making $46,000 bring home, but I mean, the average American makes about what I make. I'm only going to bring home probably somewhere around $50,000, which last time I checked, the average American makes around 50 to 53, something like that. I don't know if that's gross or net, but I'm talking about gross. Gross, I'm going to bring around 50,000. So I mean, I'm bringing home what probably most on average Americans bring home. So I mean, the stuff I do, anyone can do. And I mean, if you guys don't think, if you think I'm lying about I had such and such debt, if you go way back, like 1-2 years ago, you'll see actually, like in the background, even on some of the thumbnails of my videos, I literally had just a list of all my debts. I had a list of my debts and what days I paid them off, scratched them out, etc. I mean, anyone can do this. And I was making less money back then. That was when I was living in my hometown in Missouri. I was only making like $2 grand a month bring home at that point. Now I'm making double or triple that, which is amazing. I'm super thankful for that. But at the end of the day, anyone can do this stuff, guys. It's just a matter of coming up with a plan. Like I said, and no, I'm not, if anyone's wondering, I'm not affiliated with the EveryDollar program. I don't even have a link in my description box for it. And I'm probably not going to put one there either. But if you want, just go to the website, everydollar.com. It's free. Like I said, they do have a plus version where you can connect your bank account. It's totally not, you don't even need it. I mean, like I said, it's just all about discipline. Have the discipline to just track your expenses. They make it so easy for you. This is the website platform. If you're looking at it from a laptop, obviously it looks almost identical on the phone. It's very user friendly on the phone. I mean, all you simply do is, like, say you made your rent or house payment, you just go in here, click add new, and then boom, you just add it in. And then that's just how you keep track of all of your expenses. Like say you bought something, like I like having for my lifestyle, I put my miscellaneous and hygiene as a certain tab. And by miscellaneous, I mean, like I said, going out to eat, just pretty much anything that you're not really, it's not a must, essentially. Like if I go out to eat, if I want to go watch a Dallas Mavericks basketball game, which I haven't since I moved here, surprisingly, pretty much like anything kind of fun, spur of the moment, paying for someone's a birthday gift, something like that. That tends to go into here. Hygiene products, stuff like that. And then obviously I have everything else down here, and then my auto insurance. I mean, they make it super easy. I mean, insurance, you can even put like taxes in here. Like say you pay a quarterly tax or something if you're a business owner, you could add that in there. And then obviously your debts would be down there as well. Yeah, it might be. It's super useful. I mean, and I know there's other platforms too, like other websites that have a pretty similar one. It's just I like this one the most. I've tried a few of them, and this one's just the most user friendly in my opinion. This one, if you're all wondering, like Dave Ramsey, a lot of people already know who Dave Ramsey is. His team actually built this platform, and I've been a pretty big Dave Ramsey follower most of my life. My aunt and uncle actually like introduced me to him when I was a kid, and I've just kind of been following that type of thing ever since. And I mean, yeah, they got a bunch of stuff in here too, like their whole baby steps, local providers for like if you're looking for retirement experts, whatever, and their financial peace courses in there as well. But to the point of all this, like say you get out of debt, you have no payments. I mean, what do you guys think I'm going to be doing after the baby arrives and everything's all good? I'm not going to be, well, actually, scratch that. What I'm going to do is I'm still going to be investing. We're going to have to rebuild the emergency fund after that, because I personally want to have 6 to 12 months of expenses, probably closer to 12. We're looking at probably having around $30,000 to $40,000 just set aside in a boring money market account, making probably somewhere around 2% is what the average one, 2 to 3% is doing right now. It's just going to sit there. It's just an emergency fund for worst comes to worst, plus me wanting to do day trading full time and then hop into another business venture full time within the next year or two. It gives me that security that, hey, if I have a down month, we got the emergency fund we can pull from, and it's not going to hurt us one bit because we've got 6 to 12 months of expenses in there alone. So I won't have to like rush and then go find a job or something if something doesn't work out. I'll have time to build the business, keep day trading, etc. You guys know I'm not going to day trade full time anyways till I hit at least 25,000 in my account to begin with. But I mean we're already at $3,000 to $4,000, so I mean that's not going to take as long as it seems. But yeah, so that's just kind of outlook on that. But say you have your fully emergency fund funded of 3 to 6. I say most probably need somewhere around 3. It just depends how much control like you want to have. Like do you want to have, if you think you're fine and you don't have a worry in the world, if you have 3 months of expenses, go ahead, do 3 months. If you want 6, it's just kind of at your own discretion. But I would say at least 3 months bare minimum of expenses, because I mean you never know when the next big recession is going to hit. You lose a job, both of you lose your job, something like that. You just want to have, I would rather have too much cash on hand than not enough at the end of the day. That's how I tend to look at it. That's why I say 6 to 12 months for us personally. But let's say now you got rid of, let's say you don't agree with paying off debt for some reason, and you're like, but I'll go ahead and give it a try and I'm going to pay off one debt. Let's say you're going to get rid of your car payment. The average car payment right now, I believe, is north of $500 now, like $515 or something like that dollars per month. So let's say you had no money invested originally, and let's say you took that $500 car payment. Let's just keep it simple at $500. Let's say you took that $500 car payment and invested it over a period of, let's just say 20 years, for example, because I mean most people have a car payment on average 20 years of their life, which is just insane if you ask me. But whatever, people love their stupid cars. I mean, I'm a car lover. I drive a 1999 Honda Civic. It's paid off. It's only got 100,000 miles on it. I mean, I don't care anymore. Like I'll get the good cars once I can pay for whatever the hell I want. I will never get another car payment ever again under any circumstance, period. But estimated interest rate, you'll probably get somewhere around 10 to 12% on average. Let's just say 11% per year average, or let's even just knock it down to 10 for simple numbers. Let's say you only average 10%, and let's not even worry about the variance of the range. Let's just say on average you're going to do 10%, and we're going to compound it annually. So we'll go ahead and calculate it. So you can see right here, I mean, just over 20 years, you can just watch this is your contribution, this blue line down here, and then you can just watch how the power of compounding interest just explodes. You only put in $120,000 after 20 years, but your total value is over $343,000. So by getting rid of your car, and again, this is only based on like 10%. This is if you only invest a $500 car payment for 20 years into some sort of account. I mean, guys, a car, most of you are getting cars with a $500 car payment. You're only getting some piece of shit Toyota Camry or something like that, or like the new Honda Civic or the new Chevy, I don't know what the hell they even make anymore, Chevy Volt, like something stupid that's going to end up, all these new cars are built to die after like 5 to 10 years, 10, 15 max anyway. So I mean, they're literally built to keep you buying a new car. Not to mention, a new car depreciates 60 to 70% in value its first 4 to 5 years. So instead of having your money go up 10% a year on top of the compounding interest, on top of the dividends you're going to get reinvested every single month, year, etc., you're going to lose 60% of your money in 4 to 5 years. So I mean, where did you take math is what I'm wondering. We think it's a good idea to have a car payment. I mean, you can just sit here, show the table. Let's see. Let's just go year by year. So year one, it's pretty much you're putting $6,000 a year into it. Total contribution 6. So year one, this is showing you not even making money the first year. This is saying you just strictly put in $6,000. You didn't make any money your first year apparently. But year two, you put in another 6, so you made $600. Year three, you put in $18,000 total. So at that point, you went from making $600 your first year to making what, $1,260 your second year, right? Is that right? No, that'd be, or yeah, that would be 1,200, wouldn't it? Yeah, 1,260. You can just see how just after about year 10, that's when the math really starts to get crazy. Because you can see here, you only put in 66,000, but you have 111. So you've almost doubled your money after 10 to 12. I think it's at around, I forget how many years at $500 at 10%. It's the rule of 72, 10%. What would that be? Every 7, I don't remember how many years exactly that'd be at 10%. But you can see, I mean, at this point, year 15, you've put in 90,000. I mean, you're pushing close to tripling your money right around year 20. So, I mean, just that alone, that's just getting rid of your car payment. So let's say you just want to say, the hell with paying off my credit cards. I'll keep using my credit cards. I'm going to keep making the minimum payment every month because I'm a freaking idiot at the end of the day. For whatever reason, you think you're beating up on Chase, Discover, and all of them. Whatever. Keep your stupid credit cards, but just get rid of your car payment. Just by getting rid of your car payment, you'd be a millionaire. Not in, I mean, it'd probably take 40 years. Let's do the math based on 40 years, which is about how long the average American is going to actually invest until retirement. Let's do this again. 40 years. This is again only based on 20. Okay, there you go. 40 years, $2.6 million. I hope you like your fucking car. You think your little piece of shit Toyota is worth $2.6 million worth of retirement? So I mean, God, it's just. And how much did you put in? Not even $250,000. So not even $250,000 you put in. You have over $2.5 million. And guys, if you don't think you can retire off of $2.5 million, you're wrong. Let's pull up the calculator, because at that point, $2.5 million, actually it was almost 2.7. But let's say $2.5 million earns you 10% on average per year. You don't think you can live off of $250,000 a year? Pre-tax, obviously, you're probably only gonna bring home somewhere around, let's say 60%, depending on how fucking much we're getting taxed 40 years from now. Still, 150 grand. You don't think you're gonna be able to live off of 150 to 200,000 a year? Most of you are living off of 50 to 100 a year right now. So just by getting rid of your stupid fucking car payment, I just can't stress that enough. And let's not even get into, if you were to invest this into your day trading account, you become a successful day trader finally at this point. I mean, the math just gets even crazier at that, because we all know the percentages from a standpoint of investing versus day trading, they're night and day difference. That's why it kind of cracks me up whenever people try to like expose day traders or something online. They go based on the average the market does. It's just, comparing apples to oranges, but that's a whole nother topic. But I don't even want to get into that right now. This is just dumbing it down to just show you guys the power of getting rid of payments. The average American right now, I think, is paying like close to $900 plus a month in minimum payments when you factor in credit cards, car payments, etc. I've tried explaining this to my own father. He might get mad if he sees this video, but I mean, I've told him, I was like, dude, you're fucking dumb. All these damn car payments up to your eyeballs. But I mean, just say you changed it to, say you had no debt, average, I think, like I said, is around $900. It might even be more now. But let's say you took all $900. You did that over 40 years. I bet this is going to get nuts. Let's start off with 20 years. I don't want to blow your guys' minds up right now. Let's just start out with 20 years and see what it does. So 20 years, you're still looking at $618,000. I don't know why you had a drop here. What the hell happened there? Let's see. 900. I think it had a glitch. Let's try this again. 900. And let's just go ahead and do 40 years. Because a lot of people won't get excited for some reason over 600 grand. By the way, Social Security is going to be gone. I'm telling you guys, I'm calling it now. Social Security is going to be gone by the time you try to retire. So, year 40, almost $5 million. And again, that's based on 10%. And there's a lot of people out there that say, I mean, you can get 12. So, I mean, let's just calculate it again based on what a lot of people think. 2% makes a huge difference, by the way. You just see $2 million difference. So 12% a year average, you're talking $8.2 million. Almost deca millionaire status in 40 years. So if from age 25 to 65, you put in just $900 per month, just $900. I mean, like I said, you don't think $900 is possible? How much money do I have available? $322 left to budget. I'm putting $2,000 just in emergency fund. So say you get your fully funded emergency fund, you have $200 to $2,500 a month to do whatever you want. Obviously, I would suggest if you have kids saving like for college and stuff like that. You got, say you're not a homeowner yet, obviously save up, pay for a home, ideally with cash. Obviously, that takes a very long time though. If you're looking at buying a house, me personally, you guys know I don't like buying houses. I think they're a horrible investment, but that's another topic. But I mean, just imagine, like I said. Now let's do the extreme, what I was just talking about. Let's say you put $2,000 a month, making 12% a year. There you go. $18.5 million by the age of 65 if you do it at 25, 60 if you do it at 20. That's why I try stressing, like, to my little brother who's 19 years old. I'm like, dude, just start now. I don't care if you're putting in $100 a month. I don't care if you're putting in $500 a month. I don't care if you're putting in 10 grand a month. Just start now. And then, no, it's never too late to start. I mean, most people that are watching YouTube, you've got at least 40 years left of your life, guys. So, I mean, unless if obviously you have something serious going on. I mean, even let's just look shorter term. I mean, 20 years. You're still talking about almost $2 million 20 years from now. In 20 years, I personally will be around 40, 41 years old. God, it sucks thinking about that. I'll be getting older at that point. But, I mean, it's just this. I don't know about you guys. I just geek out over stuff like this. And this is based on you having no initial investment, like no startup. I mean, most of us are going to put in, at the minimum, $1,000. It's not going to change your equation a whole lot. Let's see how much it changes it, actually. 1.72. 1.7. So I mean, you only change it by 10,000, but $1,000 initially gives you an extra 10 grand. So that $1,000 10x just by putting it in there for 20 years. So yeah, I mean, I could do this all day. I mean, we could sit here and just play with it. And I mean, my number one go-to that I use for most people that think it's impossible to retire on your own, without social insecurity, which is going to be gone, like I mentioned, without a pension, which is going to be gone in the next financial crisis that we're going to have. All that shit's going to be gone. We're in an economy now where you have to look out for yourself. That's why they went away with pensions to begin with. Companies don't want to be looking after their employees. You have to take action for your own retirement, financial freedom, etc. And that's what we're all about at this channel at the end of the day, guys. $100 a month. That's, like Dave Ramsey likes to say, that's pizza money in most households. Or no, not an initial investment. Well, let's just keep that there because that'll be your initial. let's say you only put in $100 a month. Say you did that for 40 years. Well, let's even say 35, just for shits and giggles. Calculate, bam, you still had, and I don't know again why it all of a sudden just takes a leap like that, but either way, $100 a month, 35, I don't think that's right. Let's show the table. Either way, over $500,000 in 35 years. So at this point, you've put in, this is not the chart that I'm looking at. What did I do? Let's see. $100 a month, 40 years, 12% interest rate, annually, calculate. Okay, so that's still showing over $500,000. That's still showing 35 years. I might have broke the website. I've been using it so much. Let's just try to redo it. They probably haven't had this much activity on their website in 1 hour. And God knows how long. Let's see, 40 years, 12% interest rate, annually. Come on. Why is it not showing me? Oh, 0. Okay, there you go. That's what I thought. I was like, that didn't make sense. I know it's more than 500,000. So $100 a month invested every month for 40 years. You're talking about close to $1 million, just based on getting rid of a cable bill. Not even, you don't even have to get rid of anything, guys. It's $100. You can come up with $100 just by stop going out to eat so much. I mean, literally, when we go out to eat, I know it's like just to go to McDonald's anymore, it's like $18. To go out to a legit restaurant, it's like $50 to $100. So I mean, you just give up one time going out, 1 or 2 times a month of going out. You have your $1 million retirement right there. $1 million. And again, if you think, well, I don't think I can live off of $1 million. Let's say you have your, again, well, let's go based on just the 920,000. 920,000. Let's say it only makes you somewhere around 10% on average per year. That's 92,000. Again, you'll probably keep somewhere around 65% of this. 60 grand a year, which is a hell of a lot more than if you don't put anything in and just depend on the government, which, I mean, I wouldn't depend on them just for fucking anything at this point to take care of you. I mean, Social Security is going to be gone. CNBC even posts it time and time again, live on live TV. I have a picture still on my phone from where I was shocked that liberal CNBC of all platforms showed that Social Security is going to be gone. 2034, 2035, it is going to be gone. In less than 15 years, Social Security is going to be gone, guys. So, I mean, just thinking that Social Security government programs are going to help you retire, it's asinine. So, I was just kind of motivated myself this weekend just because I was just sitting there thinking back on where I've come from over the last literally just year, 1 to 2 years, from being just scared of, because I've never missed a rent payment before, but right before I moved out of one of my first apartment I had, actually, I almost couldn't make a payment. And I mean, just the thought of not even being able to make a rent payment terrified me. And that's what woke me up, made me realize, hey, debt fucking sucks. There's no such thing as using like good debt as much as people. I mean, I plan on someday buying an apartment complex. Most people close to me know that, but I'm gonna try to have as little debt on it as possible. I mean, I'll have a mortgage, but it'll be paid off before I start paying myself from that property. I'll put it that way. But I kind of wanted to do this video. Hopefully we've had good audio. Hopefully the audio's been good on this video. And hopefully you guys did find like some value in this stream video. I don't know if a lot of you are just tuning in. If you like the stream so far, definitely make sure to smash the like button. I greatly appreciate that. And I mean, like I said, I'm like the rest of you. I make roughly $4,000 a month. I mean, on average, I'd probably say somewhere more closer to, yeah, I would say $4,000. I probably make on average $4,000 a month. Good months, I make around 6 max. Bad months, 2,500 to 3,000. But on average, I'm making somewhere around 3,500 to $4,000 a month. Just an average American income. And I mean, it's just all about getting rid of payments at the end of the day. And like I said, once me and my fiance are married and our finances are combined, we're making decisions together, we're gonna have so much money to just invest, give, do whatever we want, day trade. It's what it's all about at the end of the day. It's about having the freedom, financial freedom, like I always say at the end of the videos, or whenever I do, about achieving your financial freedom. I don't mean just in the stock market. Like I say, yes, we talk about the stock market a lot, and I'm constantly saying at the end of the video, hopefully you guys are working towards achieving financial freedom, etc. It all starts with the basics. And that's why I want to do this video, because I don't talk enough about the basics, where if you don't track your money, you're going to be scratching your head wondering where it went and why you're not able to invest into your account, why you're not able to save for retirement, why you're not able to save up for a good emergency fund, why you're not able to save up to buy a house if that's what you want to do, why your kids are having to go to Sallie Mae for college loans because you didn't prepare to help your child with college. Whatever your dream is, your financial freedom, whatever defines financial freedom for you, it all starts with the basics, which is getting out of consumer debt, having a good emergency fund of at least 3 months, bare minimum. Like I said, I prefer 6 to 12 personally, but at least starting out with 3 to 6 months roughly, and then just deciding from there how you feel. And then investing, just invest. Learn the market. Don't be a passive investor. I hate passive investors so much. There's so many people that literally just throw money in an index fund, throw money in a mutual fund, throw money to some quote-unquote guru, and then they scratch their heads and wonder why stuff like Bernie Madoff happens. Don't be a passive investor, but I mean literally, like we mentioned. I mean, if you just put this $100 into just a basic index fund, mutual fund, something that's going to make you around 10 to 12% a year, $100, you'll retire a millionaire. Now, obviously, it's not ideal to think, like, I know it's not ideal to want to think 40 years out as, well, I'm only going to have $1 million, I'm going to be like 60, 65. Like, yes, obviously, we all want to retire at an early age, and then that's where, obviously, you just have to kind of plug in the numbers, plug in, like, I don't even factor in day trading when I figure my retirement, because day trading is going to be like my source of living. Day trading, along with other business ventures, are going to be my actual quote-unquote career source of living. When I think about my retirement, that's when I'm looking at just, hey, I'm not going to be doing anything other than charitable work, helping people, traveling the world, etc. And that's how I figure how I add up my retirement. So it's different for everybody, but like I said, if you're strictly just working a job, and which I doubt most of us that are watching this channel are, but if you're just strictly worried about, hey, how can I have such and such $1 million by the time I'm not going to be able to work anymore? Use this calculator, or any calculator. This one, I just happened to type in compound interest calculator. This one pulled up, and since it's a .gov website, I was like, hey, this is going to be a good legit website no matter what, essentially. So I mean, if you guys want, I'll go ahead and copy it, and I'll probably paste it into the description box as the video is uploading. Or you can just go to yourself, www.investor.gov, and then I think they have a search bar where you can just search compound interest calculator. So yeah, I mean, I definitely suggest you guys like go in there, and if I don't know how many of us we have in here, we got 4 of you tuning in. I mean, if anyone wants me to like plug in any certain numbers, like based on your age, based on how long you want to be investing, definitely just let me know in the chat. Like if you're 35 and you're wanting to retire by the age of 50, which would be 25 years, let me know, and I could like run some numbers right now, and that way we could just see. I mean, I'll go ahead and do that, because I know a lot of people I have tuning in are usually quite around like 20 to 40 years old on average is usually what we got in here for the most part. I know we got a few of you that are over 40 or a few that are under 20, but it shows my average viewers between 20 and 40. So I mean, we'll just do it based on 30 years, since most of you, I mean, let's do 25 even. 25 years. Let's see what $100 would be It's not going to be quite as much, but I mean, you're still probably going to be pushing $750,000, I bet, or maybe $500,000. So actually, that's a little bit less. So, I mean, you can see just how 15 years made such a huge difference. Why? That exponential curve of compounding interest. I mean, it's, again, just show the table. I don't know why this table's still wrong. Or no, okay, that's right. So yeah, you can see here, you can just go through the table, and this will show all the way up to 40 years. You put in $48,000. You only put in about a year's worth of your income over 40 years, and you got almost $1 million. And all of this, I didn't even think about this. All of this is based on you never, ever, ever getting a single raise. Think about that. You're working the same job, not one raise ever. You didn't change a job, get a pay increase by changing jobs, getting promoted within a company, getting your own business. This is just based on you never, ever, ever getting a raise, never, ever putting another dollar other than $100 a month. If $100 a month is all you can do for 25 years, I'm sorry, but you are a loser. I mean, your goals are so shallow. I mean, there's no way I would only be putting 100. Like, I do have an actual account that I often forget about, actually, that it's literally just like, I call it my retirement emergency fund, and that account does get $100 a month. Just because, I mean, literally, it's kind of my, if all else fails and all my money gets blown up in my face, I'm at least going to have $1 million essentially to fall back on when I'm in my, whatever that'll be, late 50s, early 60s, whenever I end up deciding to pull out of that. That'll probably end up being an account that'll never ever get touched and will probably just get passed on to future generations, in all honesty. It depends on how good or bad my kids end up growing up to be. Hopefully, however many kids I end up having will end up being good, on the good side, because they'll know from a very young age, if you don't act well, you're not going to get anything. That's just how it's going to be. But, I mean, literally, what you should be able to put in, bare minimum, you should be able to put in $500 a month. Just period. I mean, that's how I see it. You should be able to put in $500 a month. Pending, of course, that you got rid of a car payment. Car payment alone, $500 for most people. You get rid of your car payment, you pay off your debt. You have your, at the minimum, 3 months saved of emergencies. Honestly, I keep telling people, you shouldn't even day trade. You shouldn't even be considering trading in the stock market until you're debt free at the minimum. You just shouldn't. Because when you're tied down in car payments and house payments and all these payments that if they don't get paid, someone's gonna come fuck up your credit by repossessing your car, foreclosing on your home, just all these worries that if this doesn't get paid, this negative thing's gonna happen. You don't have the money to be risking day trading. Like, that's why I didn't really day trade. I started day trading literally about a month after I paid off debt. I started day trading in like March, I believe, of last year, somewhere around there, right after the first little hiccup in the market last year, because I was getting really interested in the market at that point. I honestly thought we were going into a recession back then, like a bear market, so I wanted to be able to buy in as everything kept melting down. Didn't quite happen that way, of course, but I didn't start playing around the stock market until I had pretty much no payments other than my rent, my electric, my food, like my day-to-day, the four walls expenses essentially. I had no consumer debt. So, I mean, you shouldn't even be day trading. I'm not saying that you should not be putting any money in the market, period, like investing into like an index fund or anything, which I personally like index funds over mutual funds. That's one thing I don't necessarily agree with Dave Ramsey on. Dave Ramsey's more of a mutual fund guy. Mutual funds have way too much fees. Mutual funds eat up so many fees. I know he has a good group of people though, so he probably doesn't pay a god awful lot of fees, but I know a lot of people that are getting ate up by fees year by year. Where index funds, we're getting sidetracked here, but just look into index funds versus mutual funds when you go to invest is all I'm saying. But we'll calculate that. There you go. I don't know again why it's showing that weird little glitch there, but let's refresh it again just to make sure we're doing this all right. Initial investment 500. Monthly contribution 500. Length of years 25. So this is going to fit for most people. Most people want to be retired within the next 25 years, I know, because like I said, most of us here are between the ages of 20 and 40. So I mean, if you're 40, that'd be 65. If you're 20, that'd be 45, even better. Estimated interest rate 12%. And then we'll do annually. Calculate. There you go. 800,000. Over $800,000. So if you start at 20, by 45 you're going to have still over $800,000. If you start at 40, by 65 still you're talking about, again, over $750,000. And again, all you need to do is go look at your compound interest, or not compound interest, just pull up your calculator. 800,000, let's just say $800,000 to keep it simple. It's going to earn you probably roughly 10 to 12, but let's say 10% a year. That's 80,000. And you're probably going to keep, like I said, around 65% of that. So $52,000 a year. Most years you'll be able to take out of this account. So, and that's if you need to. I mean, honestly, with this money, you should just, like I said, for me personally, anything that's long term, I don't even plan on taking any money out of it. I'm kind of using that more as to pass down to future generations, just because I guess I'm nicer than I actually think I am. Because I mean, I want to build true indestructible wealth, where like my future kids down the road would have to really fuck something up for our branch of the family to ever be broke again. So hopefully you guys did enjoy the stream. I know it's a little bit different than the average Sunday stock watch for you guys. I probably should have just titled the video something else. If you guys want me to, I'll look at the market overall. I honestly think the market's kind of making a head and shoulders pattern. This is the weekly chart. It's kind of been forming this over the last few weeks, about a month or so now, the second shoulder. I think personally, we're probably going to get somewhere up around 290 again, kind of back where we did in January of last year. We're right around this 288 to 290. I don't even think we hit 290, actually. We hit right around 288, so we're right around that same point. But in all honesty, I think the market probably will hit somewhere around 290. We'll get close to testing all-time highs. At first, I was thinking we might hit 300 before legging down, but that would kind of interrupt the head and shoulder pattern. If we hit 300, then I think we're going to keep going bullish for a little bit longer. But, I mean, market's due for a pullback. It's been on a hell of a run lately, and we're definitely kind of looking to seem like we're forming this head and shoulder pattern on the weekly chart. So, I mean, if we start to pull back this week, could get a little ugly, but we'll see what happens overall. And what positions do I have? For those of you that might be wondering, we have 2 puts on Apple. Those are 4/12 expiration. So this Friday, we got them pretty cheap, 69 cents. If we want to take a look at Apple really quickly, you can see Apple's right around 197. This got filled right at the bell, essentially. Whenever I think Apple was at like 197.05 or something like that. Yeah, 197.07, whatever. But so personally, I think the markets honestly are very overdue for a down day. I think we all could probably agree on that. I mean, you can even see Apple personally has had a $13 run over the last week or so of trading. SPY has had a pretty damn good run itself, from a percentage standpoint, from a low of 277.64 to a high of 288.93. That is a 4%, over a 4% run over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading sessions. So almost a 0.5% a day of gains. QQQ, we're also again looking at a pretty good gain over the last 5 to 10 trading sessions. I mean, everything overall is just due for a pullback, obviously. So we'll see what happens. I didn't mean YG. I forget what Dow Jones Futures is. YM, I think. Yeah, there we go. Dow Futures, they're even looking like they're starting to run a little bit out of gas here. So, I mean, we'll see what happens. I mean, even the Dow is up like, what, 1,200 points in the last 5 to 10 trading sessions. So we'll see what happens. Again, that's just my opinion on the market. But like I said, hopefully you guys did enjoy the stream. If you did, definitely make sure to smash the like button. I greatly appreciate that. And like I said, if you're wondering what these websites are, like I said, this is just every dollar. This is on the Google Play Store, Apple, the Apple App Store, and then this is the www.investor.gov. If you just search compound interest calculator, it will pop up. But I know we've got about like 3 to 5 of you kind of tuning in here. So like I said, hopefully you guys did enjoy the stream. If you did, definitely make sure to smash the like button. I greatly appreciate that. And if you're new to the channel, hopefully you did enjoy the stream and learned a couple things, maybe opened your eyes up a little bit to why you should just dump your debt and start your journey to financial freedom. Let me know in the comments or description box. Let me know in the comments after this video uploads kind of where you're at, where you want to go, etc. I'd love to kind of see what kind of goals we got in this awesome community we got. And by the way, we have a Discord group chat that's down in the description box. We're right around 80 members in there now. It's awesome again to see that community growing day by day and week by week. But yeah, on that note, hopefully you guys have a green week this week. I don't know if I'll be able to go live tomorrow. It seems like a pretty full day for me, Monday and Tuesday. And besides, I don't have any day trades available till Wednesday, so I might be able to go live Wednesday. I'm going to shoot for that. We're going to shoot for going live Wednesday, and we might even do a live stock market trade sometime in the middle of the day. It just kind of depends how the day works out. But yeah, hopefully you guys did enjoy the stream. Hopefully you guys have a good week. Hopefully you guys had a great weekend. But until next time, guys, keep on going out there, making your profits, covering your profits, and achieving your financial freedom starting today and for the rest of your life and hopefully your future generations beyond. And until next time, guys, take it easy.